Expect developers to be more cautious this year when it comes to collective sales or en blocs. Analysts say economic uncertainty will continue to weigh down on buying prospects. Plus, cooling measures and a new rule on gross floor area that would reduce the space developers can sell. Rebecca Mateo reports.
The en bloc market may have ended 2022 on a higher note relative to the pandemic-stricken years, but activity is cooling off.
The en bloc market actually picked up in 2021 after the circuit breaker. Developers came in to replenish their land. Then in December itself of 2021, we had cooling measures. The additional buyer's stamp duty for developers was raised to 40%. That raised the risk for developers significantly, and it slowed down the en bloc market in 2022.
The number of sites that successfully sold fell from 18 in 2021 to 13 last year. Several en bloc properties sat on the market as sellers and buyers failed to agree on pricing. There were about 30 en bloc sites launched last year, with more than 20 sites unsold. Some residential deals that did not go through include Kensington Park and Loyang Valley. Kensington Park was put up for sale at more than $1 billion and Loyang Valley at $980 million. Economic uncertainty, higher borrowing costs, and further cooling measures that held back activity last year are expected to continue. Developers are also hesitant over a new rule in June to standardise floor area definitions across government agencies. This would mean less space in projects for developers to sell.
Because the reserve price has been set, and that reserve price was set in a time where this new ruling has not been taken into account, developers will have an issue trying to reconcile the higher reserve price vis-a-vis lower sales sellable areas that they will face with. That means they have to sell a higher price.
But it's not just developers that are expected to hold back this year. More owners of private homes may shy away from en bloc deals, thanks to a recent cooling measure requiring them to wait 15 months after the sale before they can buy a resale flat.
If some of the owners in the private market, after selling, wants to move to HDB, right now they are not able to unless they fulfill certain conditions. Then they might actually resist the wholesale itself.
Analysts say the headwinds and hurdles in the residential market could drive developers to explore the next best thing, commercial sites.
If the residential site is reasonably priced and has a right bite size, meaning they don't go too high in the absolute quantum of investment, developers may still go for residential. But at the moment, it may be the commercial sites that they may be looking after going for. But unfortunately, there are few collective sales sites on the commercial front.
Among commercial and residential sites up for en bloc this year, Manhattan House near Chinatown and Trendale Tower and Charming Garden Condo in the central region.